Alcoa's better-than-expected earnings report last night is helping to drive stock futures up after investors digest the worst-performing day of the year on Tuesday. Easing bond yields in Spain and Italy are also helping to improve sentiment. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. After a 5-day losing streak, stocks are trading up this morning overseas. Scott, how are you approaching the morning?
Well, yesterday, I'd say midday, we sent out notes to cover your shorts, that it's been a 5-day losing streak, and the oscillators were screaming oversold. The McClellan oscillator, which I talk about a lot recently, was at negative 95. We've only seen that a few times even over the course of the last year, when last year we were correcting off of the highs where we saw a 22% move. So at that particular point, I think a lot of guys, the smart thing to do is to cover your shorts, but it was a little hard getting long. So at the end of the day, I actually got a little long the spiders because I said, you know what, we're that oversold that if we open up down, I could buy more. So I felt the risk reward was in my favor. So now the question is, where do we go? What type of bounce do we get? And what you do is you measure the bounce, and that'll help us predict the future action and whether or not yesterday's low will stick.
Yesterday after the close, also what's helping today is Alcoa reported better than expected earnings results. Most people expected these guys to report terrible numbers and miss. How is this playing in the market today?
I think at this point, every little bit helps. So that the positive tone and the positive report out of Alcoa, which has been a rarity, is definitely helping. If you look at the chart of Alcoa, people left it for dead. Stock has been trending lower, dripping lower with absolutely no interest. So closing the lows at 930. So opening up here around $10, it makes sense. I wouldn't be going out and buying Alcoa on the open. It's going to hit some decent resistance here around 10, maybe even 10.20. But it'll be nice to see if it holds up. I'd like to see Alcoa open up, not get sold off, because if they open up and sell it off, it might have an impact on the market. So it deserves to open up and hold, and then we'll look at that at another time for an investment opportunity.
So let's look at the chart of the SPY and talk about maybe some of the Fibonacci levels.
Okay, well,
first, I think
that's important to measure because that helps you figure out what's going on here. And if you look at the chart, I'll actually go to the SPX for now. So if you take a look here, you will see that we had 5 harsh down days. Okay, this is when IBD put us in rally under pressure. Here was your market correction. Ever since then, about 4.5% off the highs. And yesterday we took out the 50-day moving average. So for me, what I'm going to do is, on this bounce, just say right back to the 50-day, I'm going to sell half my spiders. So this way I could potentially reshort this area, which to me, if the bears have any control, they're not going to let over the next few sessions this market get back above, just say 1378 to 1383 with the real line in the sand coming in at around 1386. So for today, I think it'll be a win if the bulls could reclaim that 50-day moving average, but I don't think it's game over yet. This could just be an oversold bounce that we'll measure moving forward.
What was interesting about yesterday was that not only did we see the whole markets off, we saw some of the leaders. And talk about the Nasdaq 100. They've been holding in there strong. Usually the leaders kind of pull back when the market correction's over. Is that what we're seeing?
Well, at the ending stages of a correction, that's when they start to sell off and they join it. So yesterday you saw that you saw Apple, Priceline, Baidu, Google, a lot of the high tech or high beta tech open up and reverse low, and that intensified the rally. If you look real quickly at the Qs, you will see Qs are still holding up. Qs are well above the 50-day moving average when the indices are not even there. Looking real quickly at Apple, you'll see you had a big time reversal yesterday. So the question is, can you reshort this stock up $5-6, or does it just continue this upward trend? So watching the leaders, how they react today, I think will give us clues on what type of bounce we get and whether it's shortable or we just continue on a new upward path.
One sector that got hit particularly hard yesterday was the home builders, the XLH. What does that mean for them? Is this still going to be a downtrend, or is the market momentum today going to be able to help them turn back into the green?
I think it's going to bounce like the other sectors. It was strong in the first quarter. It started to, weaken. And if you look at the XHB, just like everything else, this looks more like the spiders here, where it lost the 50-day, so it's not actually leading like tech right now. But we're going to go much deeper into this with gold, with the financials in the long-form version. So tune in then.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. With T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.